Our guest this week is Amber Illig, founding general partner of The Council. The Council is an early stage firm focused on essential industries like supply chain and healthcare. Amber has a deep operating background, having worked at Apple, Cruise, Snap, and Eli Lilly. We talked about why Amber loves essential industries, how she built a proprietary network of operator angel investors, and her nuanced take on AI. Please enjoy. Amber, thanks for coming on the show.
Thank you so much for having me, Joe. I'm excited.
Me too. Can you get started by telling listeners about The Council?
Yes, the Council is a venture capital firm. So we invest in pre-seed stage companies. Sometimes we're the first check-in or first commitment in. And we invest about 50K to 100K out of our fund one into software companies that are B2B focused and focused on solving critical problems in essential industries. And essential industries could be areas like healthcare, logistics, manufacturing, construction, supply chain. These are a lot of the industries that we rely on day in and day out, whether we're thinking about it or not. And so we believe that in good markets and bad markets, these industries matter, and we want to see more software built for them.
Can you tell me more about the critical part? That part sounds interesting.
Yes, I have to mention that because I feel like right now, when I started investing in these areas, it was not popular to do so. It was when Web3 was taking off, and everybody's like, "Why aren't you investing in this?" And I was like, "I want to invest in manufacturing and logistics and healthcare." But now we're going through a phase where it is becoming more popular again to invest in these areas. And what I've seen is, sometimes, especially in this age of AI, too. A lot of people are just building AI for the sake of building AI or building for a really cool industry for the sake of doing it. And to me, that's not enough. It's not enough to build a cool product, especially in these industries, because a lot of them, they're used to doing things a certain way. And unless you're going to come to them with a product that's going to significantly change their bottom line, they're not that interested. And they don't care if it's the coolest, latest, greatest AI product out there. They just need to keep their business running because it is essential. And so that's why I include in there like critical problems in these essential industries.
Do you find that buyers on critical industries, and some of them, let's call them supply chain or healthcare, maybe manufacturing, are they more ROI centric than some other types of corporate buyers?
I think they have to be. Yeah, a lot of their businesses are more mature, and like any other industry, there's small business, mid-market, and enterprise, but even a lot of the small businesses have been around for a long time. Mid-market businesses have been around for a long time. And so they can be set in their ways. Like they understand how their P&L operates. They figured out how to run their business. They know whether or not they can just throw heads at a problem to make it go away. And so if you start, coming to them with a new idea, you really have to show that it's going to work and it's going to impact that bottom line. Otherwise, they're not really willing to take the risk because they're like, I can, reasonably predict how this business is going to go for the next year or so because I have 10, 20, 30 years of data on that. So you really have to have a strong case to go to them and say, hey, I could actually either increase your revenue or drastically reduce your cost.
Is go to market different? Now, these are all different industries that we're talking about. And so go
Yeah,
to market will be different for each one. But like supply chain in particular looks interesting to me. It's very fragmented, lots of different solutions, and a lot of solutions do have features that kind of overlap with one another, and they all seem to integrate with one another. And there's a lot of frenemy ships happening in
right.
supply chain software. How do you think about that as an investor in the space?
Yeah, I mean, it's challenging because there are so many new like startup entrants, but then you also have these giants like SAP that, they've been working inside of these companies forever. They have really deeply ingrained tentacles into these companies. So we have this, theory that any new software applied to these sort of industries, especially supply chain, it needs to augment the existing technology and the existing operation rather than try to rip out and replace it because that's going to be really tough. So if you're going to market saying, "Hey, I'm going to replace your entire, ERP," that's going to be very difficult. But if you're coming in and saying, "Hey, I have a software that will actually take very little time to integrate, and I can show you right now what that would do to your numbers if we were to integrate it today," that can maybe get their ear and get their attention, and then it makes it a little bit easier to make that sell. And then I also see that a lot of times in a lot of these industries, because they have been around for so long and they're a little nervous to adopt change too fast because it could impact their business negatively. Sometimes whatever their peers are doing goes a long way too. So it can take longer to get that first sale if you're focused especially on mid-market or enterprise. But as soon as you have one, it's like their nine peers are like, well, I guess if they're trying it, it must work. I'll try it. So really, I think it's one of those industries, especially supply chain, where the more people you get around the table early on, the better. As design partners, and I'm not always a fan of design partners. Sometimes it can give you like a false sense of product market fit if you have somebody who's
They're
giving you advice
popular
on
in
your product,
pre-seed
but they're not
decks.
paying. Yeah, they're really popular. But I do think there's certain industries where you kind of want your customers on board from the get-go so they can see what you're building. And one of them might convert because you've built up credibility with them over a period of time. You just have to make sure that you have the right role on board inside of that company to make sure it's worth it. So, and then we've also seen companies in all of these verticals experiment with different sorts of channel partnerships. It looks different for almost any company that we invest in, but we try to look for these opportunities where it's like one to many, like maybe there's an association of, um, who knows, like plumbers or something. And instead of targeting every single plumber, you can go through this association. We haven't invested in a plumbing software company, but that's just an example where, how can you get more bang for your buck when you're going through a sale by like, targeting somebody that has a huge network already of your customer base.
You mentioned supply chain and sometimes a hesitation to try something new because it might make them stumble. Curious, can you expand on that? Like what specifically, beyond just a general aversion to not wanting to be the first one to try something, what about that
Yeah.
space makes people a little more hesitant?
I'll just pull a little bit from my background prior to VC. So the first half of my career, I worked in hardware. So I worked on medical devices at Eli Lilly, helping ramp up an operation to put a medical device back on the market that people with diabetes relied on. And then after that, worked on iPhone at Apple, helping to ramp up factories in China for mass production, making sure we'd be able to hit launch dates by stress testing the factory and also down selecting the engineering design. And then did the same thing at Snap on a smaller scale for spectacles, their first hardware product. And in all of these experiences, one of the biggest risks to any one of these launches or FDA approvals or anything going live was making sure you actually have enough materials in the factory on the day you're trying to build, because it's extremely expensive to have an entire assembly line up and running and entire staff there ready to run it, and a bunch of people like me trying to make sure it's running right. And then you're missing like one bag of screws and you can't actually assemble the entire thing. And if you imagine where that bag of screws is coming from, it's like anywhere between like one of 200 components to 600 components in these sort of devices. And so there are a lot of things that can go wrong because these things have to travel from all over the world. I mean, it was unbelievable, especially working at Apple, to see like the entire globe basically lit up with all the different components coming from everywhere to get to this one factory. And so if anything slips, like, everybody's on deck and this thing, cover plate's going to be 2 days late, you just lost 2 days. And those are super valuable production days, even when you're in development mode. In the future, when you're in production mode, it's even more costly because you can calculate the millions of dollars that you're losing that day by not actually being able to run your production line. And so it just has this cascading effect where if one thing goes wrong in that chain, like imagine you're trying to make a cover plate for an iPhone and the glass inside of the cover plate is coming from one supplier and it has to get to the next supplier to be assembled into a sub-assembly. And then that sub-assembly has to be sent somewhere else to go through some final process. And then that has to be sent to this final factory that's putting the whole iPhone together. Again, I'm using this as an example, but there's so many different things that can go wrong, and visibility is one of them. Just understanding, where is this part that we're waiting on? Is it going to be here on time? And then understanding the cost and just managing, like, how many of them do we order? What do we think our demand is going to be for this at the end of the day? And that's if you're preparing for production mode. But if you're preparing for development, you have to be really thoughtful on like what's the minimum amount of these devices we're going to need, or these sub-assemblies we're going to need in order to test what we need to test. And then there's this thing called minimum order quantities. So, the price per unit goes down on everything you order if you order a bulk amount of it, just like going to Costco and buying a ton of milk or something. It's going to be less per gallon if you're getting it at Costco than if you're getting it at your local grocery store. So Same thing happens with these huge components. It can make millions of dollars of difference, but it's this trade-off because sometimes you need small amounts to test things and they're not final yet, so you don't want to order a lot of them, or it's your first production run of something and you don't even know if customers will buy it yet, so you don't want to order too many. But as soon as you get that signal of what that final demand is going to be, you need to be able to crank it up. And when you do that, you have to go notify everybody in that supply chain, hey, you need to now update your entire factory to like ramp up production by like whatever, 3x, 100x, whatever it is. And by the way, we're going to need this component in like 6 weeks or something, but sometimes they need even like 6 months of notice. But it's just all these timelines, all these intricate processes. And then there's the logistics of even getting these things back and forth, the negotiations that happen between companies for the prices of these components. So there are a lot of different ways, a lot of different reasons it's complex. And these deeply integrated systems like SAP and huge companies like that are basically just keeping this data inside of these companies, and it's just like massive databases, and you can update it and kind of keep track of things. And they are very imperfect because they're very clunky and large, but they have so much data in there, and they're already integrating to so many things in at factories, at brands, that it's just risky for companies to want to rip out and replace that. So instead, they're like, how can we build on top of it to make it better? And maybe someday somebody will replace it, but it's just the odds that you're going to find that one that can actually make that sell is going to be really hard. So yeah,
So generally more vertical rather than horizontal solutions.
definitely. Yes, definitely. Yeah, we focus on almost all vertical software.
I want to go back to the firm and your story. So I listened to a fair number of podcasts you've done and read a fair bit about you, and you were very deliberate in how you went about building the firm and building experience and track record over time. Something I really like to hear more about is the angel network that you've put together. That sounds great in many ways, but yeah, I'd love to hear more.
Yeah. So the Angel Network, we call it the Council Angels. So it's co-branded with the Council Fund. We are a venture capital firm, but this is kind of a strategic scout arm, if you will, for the venture firm itself. And oddly enough, it's been around for longer than the venture capital firm has. So it started as a side hobby. I came together with a few other women who were working in tech at the time. I was at Cruise and I was just starting to angel invest after having gone through the Snap IPO, but I had no idea how to discover deal flow other than the few top coworkers sitting around me that were spinning out to form companies. And I was just like, how do I find more of these so that I know that I'm looking at enough deals to invest in the best ones? I started asking around and came across some other female operators like me working at different companies, like Slack and Square and Airbnb, Open Door. And then we had one person who was a chief of staff at first round, and then another person who was, I think, early product at PayPal. So she had been angel investing for many years in hundreds of companies. And we were able to kind of pool our minds together. Those two understood due diligence very well. And then the rest of us had a lot of deal flow, but just little pockets of deal flow. And so we kind of came together and started reviewing deals together. This was probably about 6 years ago now. And I started angel investing, and that really like ramped up my deal flow. I kind of became a natural leader of the group and grew it to about 50 members by just word of mouth. People would come to our meetings and they'd be like, oh my gosh, I have a friend who really wants to join. Can I bring them to the next meeting? And so it was all just hosting founders, back to back for pitch meetings in San Francisco in tiny little conference rooms at people's offices that would let us use the space. And about 3 years in, my angel track record had really taken off. And that community had grown, like I said, to 50 or 60 members. And it just felt like we have something here. I knew I wanted to go a full-time into VC and launch my own fund. But when I thought about, should I do it completely separately outside of the Council Angels, or should I co-brand it and turn this into something bigger? I leaned toward the latter because that angel community had become so central in terms of like a flywheel of deal flow. And it felt very proprietary to something that we could build. And so now today, our angel community has about 190 operators in it, and they're all vetted by applications and interviews. And we look for people that would be super value add to founders that we introduce them to, and also people who have really interesting perspective to add to deals. So you'll see people like finance expert, legal expert, engineering leader, early PM at Figma, people like that. And that crew comes together and can really help us get new access to deals and diligence those deals in new ways. And on the venture fund side, we actually end up rewarding them with a slice of carry if they refer us to a deal that we end up investing in out of the fund. And then even if we're not investing out of the fund, if they bring a deal to the table and a lot of angels want to commit to it, or if we are investing out of the fund and they want to invest in it, sometimes we'll form an SPV so that it's easier for them to write small checks alongside the fund. So it's just kind of this nice symbiotic thing where it's really not competitive with the fund. And we've just created this program and constant opportunity for professional networking and education and angel investing that keeps people coming back and naturally makes it the first place that people want to share deals. And an effect for me on the council fund side, it means that we have eyes and ears on the ground, up to 190 eyes and ears on the ground, kind of keeping a lookout for top founders that could be fit for our fund.
Well, I think between that and your supply chain expertise, it seems like founders would be pretty excited to have you involved, especially at pre-seed. When you're working with them, what are the areas that you coach or mentor founders around the most?
Yeah, I mean, they go through so many little evolutions in the pre-seed to Series A phase, and I feel like that's where I can be most helpful and the council can be most helpful. So typically when we first invest at pre-seed, sometimes it's, instantly it's like, hey, we need to find more investors for this round. Because we will invest regardless of what other people are doing, or we'll at least commit regardless of what other people are doing. To me, it's like a non-issue whether everybody is investing in this round or not. I'm just kind of looking at the fundamentals and seeing if this founding team makes sense. So sometimes that early stamp of credibility of like, hey, we already have a VC firm on board, it's the council, that helps them in other conversations. And I will typically look through my network as soon as we've made the commitment to invest in that company. I'll look through my network and see like who else do I know that invests at pre-seed that would be interested in this company. And sometimes it's seed stage firms who like to go early occasionally, and that can even be a good firm for them to build a relationship with either for that round or for the next round. And then after the fundraising round is put aside, let's say they've closed their whole pre-seed round, all is good, everybody's signed and wired. Then it becomes about like team stuff and building and dynamics like that. And it's different for every company, but there's almost always something team related. So sometimes we've had situations where somebody hired a founding engineer who then, of course, just wanted to become a co-founder overnight and was kind of making some big demands. And the founder needed somebody to talk to who they could trust. I was that first call on the cap table and able to kind of talk them through that situation, especially having been a people leader in the past at companies that are growing from seed to Series A and then Series A through growth stage. I've just seen what's normal. And I think even in that moment, they were like, should I make them a co-founder? And to me, it was like a very clear, no, they've been here for like 6 weeks or something, and you've been working on this for a year. There are other people out there, even though it feels like this is life and death right now because you like their work. So just things like that, just being a listener and able to talk through those issues and share experiences that I've had and other experiences in the portfolio too. Obviously, we keep everything confidential, but at this point, I've now invested in 60 companies, and so I've seen a lot of things go down and can kind of aggregate those experiences. And then eventually, like they want to raise the next round, and I work with them again on like building out their relationship network of the next group of VCs. And I find at seed stage, if you can, it's a really good chance to bring in a multi-stage VC. And so I spend a lot of time building up my relationships with firms that invest not just at seed stage, but they have the ability to invest all the way through growth stage, or at least, through Series B, because that gives them somebody different on their cap table. Like I don't have that kind of capital, but I have a big network. They could get somebody that maybe doesn't have the same network on the ground, but has a lot of capital. And so just thinking about like, how do we build that cap table out strategically if we get the chance to do so, and let's give it our best shot. And then I also pull in our angel network quite a bit. So I have cherry picked about 5 folks from that community as advisors in Fund One that are just on deck at any time for the companies that we invest in. So we have someone focused on marketing, PR, people ops, design, and I'm missing one. But in any sense, these are like roles outside of engineering, because typically the first role that gets hired inside of a startup is an engineer of some sort or several engineers. But then they need all these other things they can't afford. And so this lets them get advice from people who have been there, built out those functions at great companies, and can really help them take that step forward and basically fill that role on their own as a founder. So that helps a lot too, is just having those advisors on deck. But more times than not, a founder will just text me and say, like, hey, do you know a growth expert? And I'll probably have like 3 or 4 people that I just send them the links, LinkedIn's, and it's like, here are all members of our angel community. I'd be happy to do a double opt-in intro to. And, or if you want to talk to this advisor, they're already on deck right now. So I just give them a lot of options like that. And we've heard from founders, especially outside of the Bay Area, that that's super helpful because they're not always plugged into those talent networks or those VC networks.
You mentioned on another show that your dad was an entrepreneur. I'm guessing you got sucked into plenty of dinner table conversations with that and
Oh, yeah.
probably a lot more over time. What did you internalize from his experience that affects how you invest and run your own firm?
Yeah, I mean, I think it was a very real experience. It wasn't all rainbows and butterflies. Like he started building a digital ad agency in the late 90s, early 2000s from Indianapolis, Indiana. Like we weren't in Silicon Valley where this stuff was just taking off. But he had some great traction and built a really successful business that he owned for 15 years. But ultimately, over time, there were partnership dynamics. Luckily, he's really good friends with 2 of his partners that he built this business with for a really long time. But still, things happen over time, and then ultimately I saw him like weather the 2008 recession and ultimately decide to wind the business down after that. And so I just saw like how much, like, the fact that the business ever existed. My dad did not have a college degree, and he was just really good at art, became a graphic designer. I watched him make the transition from paper to the computer and then launch his own company, which completely changed the financial like track that our family was on. So that was one thing. And it was like, to me, a huge success because it was 15 years of that. And then it prepared him for executive roles at larger companies after that. Um, but it was still like very sobering because it's like not every day was easy. It was a very stressful job. And there were multiple storms that hit, including that 2008 recession. And many of those storms he weathered. And then that last one, they decided, let's not do this because I think it was impacting a lot of their customers and being paid on time and all sorts of stuff. Um, and so just seeing that, I think it opened up my eyes, informing my own business. Not every day is going to be easy. So don't go into this because you think it's going to be glamorous, which I can confirm for anybody listening, it is not. Being a VC is not glamorous, especially running a small fund and a first time fund. But yeah, I think it showed me that A, it's not going to be glamorous. B, there's going to be tough days. And C, you need to lead with a lot of empathy because you're working with a portfolio of founders who are all going through that sort of journey that my dad went through and that I'm going through now, launching my own firm. And it's different to be a startup founder than it is to be founding a VC firm. But I think because I've seen somebody, and my dad's business was a small business, it wasn't a venture scale tech company. But I think there's a lot of that mindset evolution that translates between those two groups. And so being able to have empathy for the founders and what they're facing and understand it's a person on the other end of the deal. And you need to take that into account in, A, who you want to invest in, who do you think can weather that storm? And then B, when a storm does hit, how do you support them in a way that's productive and also works in favor of your LPs? So yeah, it definitely gave me a lot of perspective. There's probably like 20 more lessons I could pull from that experiencing growing up with my dad.
I love that. You mentioned you're from Indianapolis. You live in San Francisco. I was trying to, in my head, stereotype whether you're price sensitive or not, and I had a hard
Oh,
time because of
yeah,
because of your
it's tough.
background,
Yeah,
but also where you're based. How do you think
yeah.
about price?
That's so funny. Yeah, it is the stereotypes are very bipolar on that one. So I just try to be reasonable and I really watch the market. And I'm trying to think long term. So I don't want to invest in something that's like for a moment in time, we thought that a $30 million post money valuation for a pre-product company was fine. Like that's something I'll probably never do. But I also understand that over time markets move and probably the deals we're investing in today that I think are a good deal sound terrible to people that were investing like 20 years ago. So and I also will pay a little bit of a premium for people that are experienced because I look for these sort of proven operators spinning out of great companies who've just been through a huge growth experience from the inside and seen what it's going to take to found a company in some respect. sometimes you have to pay a little bit more for those folks because they've been around the block and they're also dilution sensitive. They're thinking about their cap table and how they're going to manage it over time. And that's strategic to me. They're looking down the line and seeing this isn't the only round I'm ever going to raise. So I need to make sure I'm leaving enough room for my employees that I'm going to eventually have to hire because I'm going to be successful. And I'm also going to probably want to bring additional investors on board someday. And I don't want to like instantly dip below 50% because I took terrible terms and needed a lot of money. So I tend to I probably anchor more with the Bay Area mindset around, whether you invest in like a 5 million post money valuation at pre-seed or a 10 million post money valuation at pre-seed, if that is a multi-billion-dollar exit someday, you're going to have a good day no matter whether you invested at that 5 million post or that 10 million post. But I think when it starts getting to different magnitudes and multiples of that, I start to get a little bit nervous. So, at pre-seed, most of the deals we do, if not all, are under 10 million post money. Seed deals that we've done have been under 25 million post money. And again, those numbers, you could ask me in 2 years, they might move a little bit, but it probably won't be drastic. So, yeah.
Where are you on the continuum of enthusiasm around AI? And we'll say 1 is a total hater, and 10 is you're spinning off a new fund to focus entirely on AI and rebranding your logo with it.
Yeah. And I think I can almost have like two different personalities on this. I think part of me is a techno optimist, and I'm excited to see what it can do for humanity, especially when it comes to these like hardcore applications in areas that we need. Like we have areas that are a complete mess, like healthcare. And we can make that a lot simpler by automating things like health insurance and making sure that we're doing it in a thoughtful way. But the and logistics, like providing more visibility to everything, integrating better with systems, providing better insights to people, all of that is interesting to me. I think the human side of me is a little less excited because I think I don't know that our society is necessarily catching up with like I think we keep talking about the jobs angle, and not to get like political, I have no political take on this, but we keep talking about the jobs angle, and it's like, well, people won't need jobs in the future because AI will just do our jobs. But it's also like, okay, but people have historically needed some sort of currency to buy their food and their housing, therefore they need jobs. So it's not, it almost seems like we are overpainting this like pretty picture of AI. And I just hope that we will be thoughtful in the way that it's rolled out. But I do think it has massive potential. So that's on like the human versus professional, mindsets that I have, which are sometimes totally different, but they do intersect. And then when it comes to just investing in general, I think I am cautiously optimistic. I think anytime we have a technology boom like this, whether it was crypto or now it's I do think AI is here to stay, and it's it has a real use case, and we're already using it in our daily lives constantly. So it's not going anywhere. And even before it was popular, when I was at Cruise, we were using a lot of AI to even just build the technology. So as like an engineer turned tech operator, I already knew this was on the horizon and it's coming. It's just a matter of time. So now I guess my biggest concern is around the noise, which I mentioned earlier in the call. Anytime you have a big like hype phase like this, there's a lot of like tourist founders, tourist VCs, people that just want a piece of the pie. They want to be that barnacle on the rocket ship. And they want their best shot at winning. And I think a lot of people are good at raising money, not good at executing. And I'm really looking for the people that have a really unique insight in the industry they're building in. They also have proven that they are good at executing, and they can apply AI to the area that they're building in. So for me, it's like AI is just a new platform or a new feature that makes everything that we already invested in more powerful, but it shouldn't be something that we invest in just for the sake of investing in it to get a piece of that pie, because I've found that those sort of deals tend to flare out really quickly. So yeah, that's kind of my take. Kind of all over the place, but you're getting it off the cuff.
No, I think that's all very reasonable. To talk about pre-seed, scaling the firm over time, this is kind of a two-parter. First is, you know, you started out very collaborative strategy, focus on pre-seed, generally small checks. As you think about where you want to take the council over a very long time, What does that look like? Do you want to stay focused on pre-seed? Do you want to be focused more collaborative? Do you ultimately want to lead rounds? What stages do you want to play in? Where do you want to focus?
Yeah, I love that question. And I don't get it often enough. I think there's so much that you're building in the moment. You get asked about that moment a lot. So I think with the council, of course, all this is subject to change as assumptions get updated. But based on what I've seen to date, I think we have a huge opportunity to play between pre-seed and Series A. And maybe someday we'll move into growth stage, but that's certainly not my forte or my interest at this point in time. I think we really have shown like we can help founders quite a lot in the terms of how we support them post investment between pre-seed and Series A. And I think, as you mentioned at the start of the journey, you start out super collaborative, and over time, you might actually get more competitive because as you creep into the seed stage, that is the most competitive round that I see. And then Series A again is like a vacuum similar to pre-seed, where there just aren't enough investors that understand the specific spaces that we invest in and have big operator networks. So I think it's almost like pre-seed and Series A. There's like a core use case. There's a demand problem, supply and demand kind of mismatch there. Um,
As
and
far
then
as
seed,
capital and
yeah,
supply of founders?
yes, exactly. Like there are a lot of talented founders at pre-seed and Series A, but it's like a lot of Series A investors said, "Hey, why don't we just invest in seed? We can get better terms." And now those companies need to be farther along because we're not in as a frothy of a market. So let's just go there. And then pre-seed founders were like, "Why should we invest so early and take these risks? Let's just go to pre-seed." So it's just this nice spot where everybody feels comfortable. And I think but then at Series A, like the rubber hits the road, you need to show the metrics and need to work. And eventually the best companies will be able to do that. But if you were an early investor at like pre-seed and you already see that writing on the wall, you may be able to kind of claim your territory and, support that company 3 to 6 months before others even really know that it's on the radar. So I think eventually I'd like the opportunity to lead pre-seed, seed, and Series A. But we're going to go one step at a time. We're not going to try to grow too fast. And we do collaborate with a lot of firms that we really like. And I think it's kind of a gradual thing, like figuring out how to collaborate with the folks in your network, but also grow your firm over time and prove that you can do more and prove that you can take that bigger lead position on those cap tables. The first step would be leading pre-seed rounds.
What's something you've changed your mind about since you started the firm?
Oh my gosh, that's a good question. Um, man, I think when I first started, I thought because we have a huge operator network and I'm an operator myself, I consider myself to be, fairly generalist in terms of the sorts of things I'm interested in and the sorts of work that I've done. I've done hardware and software. I've usually been in operations roles where you're touching multiple different teams. And so I didn't see myself as like I'm a functional expert in like design or engineering or something like that. And I think because our operator network is so diverse in terms of experiences and functions and industries, I thought, why don't we go out with a generalist B2B SaaS fund? Um, because I very clearly knew consumer, especially after my angel investing track record, it was like, okay, I clearly have an eye for the B2B software companies that are going to do well, but I have no idea what I'm doing with consumer. And that's like a totally different portfolio construction if you're going to do that. So, so I had narrowed it down that far, but I didn't narrow it down farther than that. So when I first launched Fund One, the initial pitch to LPs was this should be a generalist fund because we have a generalist network. And what I realized over time is it's very hard to differentiate both on the LP side and the founder side, but mostly on the LP side um, when you're getting into like they're trying to figure out where to slot you into their portfolio, and you're saying, well, we invest in B2B software for everything. They're trying to figure out why that. And so what I realized is that it's really important to draw that connection between your personal experience as a GP and the areas that you're investing in. And naturally, that makes those founder relationships even stronger. So the second I was like, oh, I looked into my past angel portfolio. What were the companies that took off? And then I also looked back into my operating career and I was like, what are the common factors? And it was like, oh, I've always been in worlds where software is interfacing with physical operations. I always go after the hard problems, which, good or bad, I don't know why I do that to myself, but always try to focus on something hard. Um, and it became clear that like not a lot of people like working in those industries or think it's fun to think about things like manufacturing and logistics. So maybe that's my sweet spot. And I had a couple of like close friends and advisors and even founders say, "Hey, I don't know why you're not just investing in that all day long. You know a lot about that, a lot more than most people I talk to about that." So that was kind of the aha moment for me where I was like, maybe I should start tailoring my thesis a little bit more to that. So shortly into Fund One, I started really tailoring that a little bit further, and still, some would still consider us a generalist fund because we hit multiple sectors, but we're very clear on like what those sectors are and that they have to really be essential to society, the kind that don't go down just because we're in a recession or they're no longer popular.
What's a conventional view in venture that you think is bullshit?
Uh, who else is investing? So it's funny because I also run an angel community, and I realized that a lot of newer angels, this is like their number one question. And I get it for angel investors because sometimes you're writing a smaller check and you can't really take that risk of like, committing to something that might not raise the rest of the capital. But I think you can also still commit and just say, like, I'm going to wire later, provided that you raise the rest of the round, but feel free to use my name and say that I'm committed. It can be a soft circle. So, like for me, I don't think that who else is investing, especially at pre-seed, matters. I've seen a lot of situations where a company with no other VCs on the cap table, just angel investors, has done very well and raised an incredible follow-on round after, proving out early revenue in like 6 to 8 months. And I've also seen companies where everybody piled on because a huge tier one investor came on and then the company just stagnated. I've seen that a few times. So I think the who else is investing being like a top reason why you would invest in a company doesn't make a lot of sense. That said, I will say that there are some like what we call tier one firms that I have a lot of respect for. And I do believe like if you're a pre-seed investor and they're following on at seed or series A, and you can look back at what they originally said they were going to do, and they did it by the time they raised that round, and you can see that the fundamentals are actually there. I do think it's a huge vote of confidence that someone that sees so many deals and has so many opportunities decided to follow on in that round. So I think if you have a follow-on strategy, that could be a leading indicator. But I would not, as early as pre-seed, start taking into account who else is investing, just to feel that, oh, if they know what they're doing, then it should be a good deal. Because a lot of them would rather write a ton of checks in one area to hit one winner, and you can't necessarily afford to do that as a smaller fund or an angel. So you have to also take that into account too. Like, is this a core check for them or is this like a scout check for them?
Well, Amber, this is a really fun conversation. I won't keep you anymore, but for folks who were listening and want to get in touch, could be founders, who knows, what's the best way for people to contact you?
Yeah, so I'm very active on Twitter. It's or X. I'm Amber Illig, Amber Illig at Twitter, and then I'm also on LinkedIn quite a bit. So I'm Amber Illig on there as well. Would love to hear from any of you that listened to the episode and liked it.
Cool. Well,
Oh, one last
thanks
thing I'll
again.
say, if
Do
you're
it.
a founder if you're a founder that wants to pitch to council, we do have a pitch link on our website. It's www.thecouncil.co, and there's a little tab at the top that says pitch us. I will also give you a hot tip that the process is faster if you come in via referral from me or somebody in our network. So if you do know somebody in the Council Angels network, they usually have it on their LinkedIn, so you might be able to find them easily. And that kind of kickstarts the process faster. So, yeah.
Awesome. Well, thanks again for coming on.
Awesome. Thank you so much for having me, Joe. Have a good day.
Hi, Joe again. Thanks for watching the show. If you'd like more of this in the future, subscribe to our channel. If you'd like to learn more about Seaplane Ventures, just check out seaplaneventures.com. Cheers.